Greetings from Boca Raton. We're here this week at Rick Rule's 2025 Precious Metals Symposium, talking with some of the biggest names in gold and precious metals. We look forward to bringing you those interviews next week. But today we're going to talk about copper, the critical metal in global electrification, and we're going to refer to a virtual conference our partners at SCP Resource Finance held last week. All of July, we'll be bringing you interviews with the leaders of some of the most interesting copper companies in the world. If you're interested in learning about how to invest directly in the space, please visit our website at wealthion.com/free and select the form that gets you in touch with SCP Resource Finance. So we'll start today with a conversation with 29 Metals Chairman Stephen Stewart and discuss his company's mines in Ontario and Quebec.
We renamed ourselves when we acquired the Cherry asset in December as XXIX, which of course stands for 29, which is the atomic number for copper. And boy, do we have a lot of copper in our company. And I'll just start off by telling you about two of our assets, our flagship assets. And we own 100% of both of them. And our Opemiska, which is in the Chibougamau camp, is, as I said, I think it's the anchor asset in Chibougamau. It's 150 million tons at 0.7% copper in a pit. It's the highest grade open pit deposit in Canada. It's a former Falconbridge operation, which shut down in the 90s. Produced billions of pounds of copper, millions of ounces of gold, and we have reinterpreted it into an open pit, reminiscent of what the good folks at Osisko did a decade or so ago. The same thing is happening in Chibougamau Chapet with our Opemiska. I'm going to run you through it. It's very compelling, and as a result of being a top-tier mine back in its day, it has all of the legacy infrastructure, which is absolutely critical for base metal projects, including rail, road, power, and a community that is very familiar with mining and wants this new project to be moved forward, of course. I would be remiss not to say that the Cherry is equally interesting. It's not as well developed or as defined, but it's going to get there, and it's going to get there quickly. And it benefits from all the same sorts of wonderful infrastructure that the Opemiska has, except it's in Ontario. I think two of the best districts around. Cherry's in Pickle Lake, which is very mature gold camp, primarily gold camp, but you've got this copper, nickel, PGE, magmatic deposit right in the middle of all of these gold deposits, which I guess, again, to connect small world, Firefly still owns the Pickle Crow right to our next door. And of course, Orla acquired the Musselwhite just to our north. So Cherry is in its own right a very well established resource. It's the largest copper resource in Ontario. Again, all this wonderful infrastructure. And again, we own both these things outright in a relatively small company, very small company, worth $30 million. So you get the highest grade open pit copper deposit in Canada and the largest copper resource in Ontario, owned 100%. Ontario has no royalties, all on the infrastructure for the very low temporary market cap of $30 million. And we've got about $5 million cash and a position in a new company, which is part of the org group, which there'll be an announcement out today. In fact, base load is one of our core positions. We own an equity position. It's got a material announcement coming out today, so you can keep your eye on that, but I won't get distracted. Just going back here, just note we have a PEA. That's the next milestone. We just updated Opemiska's resource a couple weeks ago. Very material. I'll run you through it, but we'll move fast to a PEA to define the economics and the engineering on this project. We think it's going to be robust. Just highlighting here just quickly that the Opemiska is in fact head and shoulders above the rest of the copper open pits in Canada. You can see all the big boys there, and it's very high grade. And that's just the copper. We have a very nice gold credit at Opemiska. It's going to be very material, takes the grade well above what you see there. That's copper alone. And then Cherry's not too far behind it. And then, of course, here's Cherry. This is more specific, more granular. This is Ontario copper primary deposits. And Cherry is head and shoulders above some other fairly well-known big companies there. Again, we're just not getting the respect we deserve. Cherry is totally off the radar. We acquired it in a very unique transaction, but it's towards the end of this year. We're going to have a update on it. It's just begging for drilling, but we know a lot about it because it's a brownfields environment with lots of data, and we love data. Opemiska, we had 1 million meters of drilling from Falconbridge, whereas in Cherry we had a 250,000 meters of drilling. It's just so fundamental to us. Now, this is the meat on the bones. Game changer, as we call it here, is this resource that was just published 2 weeks ago, and really the market just shrugged it off, which I think that's going to change. You can see we've got an indicated resource of 70 million tons and an inferred at 80 million tons. Just putting that all together in pit, we're about 150 million tons. It's very large at 0.7% copper equivalent. The resource that changed, we published a resource in 2024. This has changed quite materially, and I'm going to show you why. But I think the key takeaway here is you can see there's a single pit there. It looks like two, but it's connected. We're going to define everything, including the economics and mine plan. Probably towards the end of September, early October, we expect to have our PEA out. But this is a high grade. We think it's going to be high margin project right in the heart of Quebec. The headline really in my mind is we've added 250 million pounds of copper equivalent into this resource. So 250 million pounds more than we had in 2024 in a materially smaller pit. So we're moving less rock and we're getting more copper. That will be reflected in our economics. I'll leave it there. I think just look how much smaller that pit is, and we've got 250 million pounds more copper. So that's material. And then after the PEA, I think the PEA will be robust. It'll be taken note of and will answer a lot of questions. And then we move rubber to the road. To me, it's all about the pre-feasibility. Those are the real reports. That's where the detailed engineering comes in, and we've got a clear plan to move it forward. It'll take, a minimum 18 months. Don't want to get too ahead of ourselves in planning, but we have our eye on the prize. It's all about feasibility, de-risking this project, showing its economics, and showing that this is going to be a mine again. It was a major mine. We think it's going to be a very significant mine going forward. So that's the story of the Opemiska. I'm going to shift gears to our second 100% asset called the Cherry. And we say it's a big surprise. It was really operated throughout the 70s, shut down when copper price and the economy just wasn't there. And then it was domiciled in undercapitalized juniors ever since. And we took it, we acquired it, did so in a very creative way. And completely tore down the data. As I said earlier, there's 250,000 meters of historic drilling, which we stripped down to source data and built back up our own model. We're very good at remodeling and reinterpretation. We have a very deep team of geologists, and we've learned a lot. We did this exact same process at the Opemiska with its 1 million meters. So we learned a thing or two. We love brownfields environments, especially ones with wonderful infrastructure like you see here. Pickle Lake's right there, airport, the rail. Both of these projects, both Cherry and Opemiska, sent their concentrates to the Horn smelter in Quebec. So there's a lot of similarities here. Just to define what the mineral resource, so the mineral inventory on Cherry, and the area of focus for us for now is the K2 and the K1. K2 is on the west. You can see that's 25 million tons, which is a substantial resource at 1.4% copper. 1.6% copper with additional nickel and PGE credits, which if we were to use EQs here, equivalents, we'd be well over 2% copper. We don't because we have some work to do on the metallurgy, but it's a very high grade deposit and that's where the production on this mine came from. But not to be ignored, certainly not in the context of open pit mining, which we love to do, especially on the infrastructure, is the K1 zone. It is about 3 kilometers to the east, and it's large and going to get significantly bigger. And that's where the upside is here, aside from unlocking the geology and really blowing this thing open. But locally on the K2 and the K1, there's going to be significant room for growth. It's about 55 million tons at just about 0.4% copper with additional nickel PGE credits. And we think this is going to be the game changer. We have a totally new interpretation. Again, we've stripped it down. And this is sort of what it looks like, our model. We're still working on it. But the K, this is the K1. This is the lower grade, but quite large. It's 1.4 kilometers in strike. It goes down. We've only really drilled it to about 400 meters, but it's wide open along strike and at depth. We even think there's a parallel zone there. So this is just begging for drilling. Truth be told, we think this is it's quoted in a 43-101 at 53 million tons, but we think this, without drilling a hole, it's orders of magnitude larger because of our interpretation. And in the next slide, I'll show you that. But before I do, we poked about 5 or 6 holes in this thing in 2024, and that's really the only recent drilling has been done. And the good news is it gets higher grade at depth. You can see that one of the holes was nearly 200 meters at over 0.5% copper with some healthy nickel, silver, and other goody grades there. So, and I think the takeaway here is when you the model is what we call the canoe model, and which means when the metals settle, they settle to the bottom, and we think if the deeper we drill on the K1, the higher the grades. Obviously, we want to find the 1.6% copper grades like exists over in the K2. We want to find more of that. But even this low grade bulk tonnage in combination, both resource, it becomes very significant. So I said, just shifting back here, look, this is the new interpretation, the 53 million tons on K1. What you see in the darker shade is the resource, the historic resource, or it's 43-101, but we have a completely new interpretation, which is similar to what we did at the Stockworks on Opemiska. The zones, the in between, they carry. When we went up there and took inventory of the core, they did not sample in between those darker veins, and so we sent it off to the lab, and lo and behold, it carries. And we're going to be mining this anyway, so it's all it was counted as waste, but in fact, we view it as ore. It's very large, and I said orders of magnitude larger. And the other bonus is the dip on this is about 50 to 55 degrees, and any mining engineer will tell you that's very favorable for the strip ratio, which I will quote, but is going to be very low by the time we're done with Cherry. So Cherry is the big surprise. It's going to get bigger without even drilling a hole, but it's just also just dying for drillers drilling, and we're going to have a very robust drill program towards the later half of this year. So stay tuned on that. We have the eye on the long-term prize. That's where the real value is. We've got a plan. We've costed it out. Obviously, it takes time, and we don't want to get too far ahead of us. Cherry is about a year or two behind the Opemiska in terms of its definition and reports, et cetera, but can get caught up quickly. And we think it will. As this market, we seem to be on the cusp of a turnaround in terms of the mining and the metal sector being popular and proper capital being allocated to our industry, so we can develop these really great assets right in Canada with all this access to infrastructure.
The portfolio at the moment is comprised of 2 flagship projects, the Purquenes project in San Juan, Argentina, and the Carrasco project in Colombia. The advantage of having 2 projects is year-round ability to get on the ground and drill, and also to spread the corporate and technical overhead across two projects. The valuation at the moment is around about 27 million Canadian. The 2 projects that I touched on before are the Purquenes copper gold porphyry in San Juan and Carrasco along the Choco belt in Colombia. Drill intercepts, Pampa drill intercepts at Purquenes Central. The primary target there on the property include 800 odd meters at 0.4 copper, 0.51 gold, including 518 meters at 0.53 copper, 0.73 gold. This season, recently concluded season, we drilled for the first time Pure-Kenes East. Our maiden drill hole intersected 98 meters at 0.49 copper, 0.16 gold, within 208 meters at 0.31 copper, 0.13 gold. As you touched on before, Pure-Kenes is proximate to multiple giant copper deposits. We've got 2 discoveries made already on our property and further untested potential. Carrasco along the Choco Belt, very limited drilling, 3 historical holes there which date back to Rugby Resources drilling in late 2022. Significant copper moly mineralization from relatively shallow depths, a large untested coincident soil and geophysical anomaly, and big potential there for multiple discoveries of significant size. Focusing on the Pure-Kenes project now, this was privately held until Pampa stepping in late 2023. Minimal historical exploration prior to our involvement, about 3,000 meters in total. And we're immediately adjacent to Aldebaran Resources Altar deposit. I highlighted earlier some of the intercepts that we've drilled ourselves here at Pure-Kenes, and I think the key selling point here are the gold credits and the relative shallowness of the mineralization. The Pure-Kenes project itself sits within a 40-kilometre radius of a number of significant deposits. Those include El Pachón, the Glencore project, the Los Pelambres operating mine on the Chilean side of the border, Los Azules, the McEwen mining project, as well as our immediate neighbour, Altar. The drill platforms at Pure-Kenes are around about 3,800 metres above sea level. Our campsite's at about 3,250. We access the property via the Glencore road concession from the town of Barrial. That's the same road that's used by both Glencore for the El Pachón project and Aldebaran Resources for Altar. Fully permitted for exploration drilling, water, easements, the like, and we've completed about 7,000 metres of drilling since acquiring the property late in 2023. This plan view in front of you shows the Pure-Kenes Altar porphyry cluster. The Pure-Kenes property is part of the same porphyry cluster that hosts the Altar deposit. And as I mentioned before, I think the key selling features of Pure-Kenes are the relative shallowness of the mineralization and the significant gold credits. Altar have a measured and indicated resource of about 2.4 billion tonnes at 0.42 copper, 0.07 gold. And as we'll see, the Pure-Kenes project has a very, very strong gold credit, and indeed is a gold-rich porphyry system. As you can see from this image here, both the Pure-Kenes Central and Pure-Kenes East targets, which are outcropping porphyry stockwork zones, cover an area of only about 300 hectares. The balance of the property is under talus-like cover. We've completed multi-phase mapping and sampling. Next season, we will need to get back and do some property-wide geophysics to determine what other targets there might be under that cover. The Altar property, if I'm not mistaken, has 7 reported mineralized porphyries. We have at least 2 on our own, and I think there's a strong potential for further discoveries. The Carrasco project is located along the Colombian Choco Belt. The projects of note along this belt include Murindo, Pantanos, and Comitar. Those 3 properties sit within the MCC package. MCC is a private Canadian issuer that counts First Quantum, Glencore as shareholders. And indeed, the Comitar property specifically is under joint venture to Rio Tinto and sits immediately adjacent to our Carrasco property. The first 3 holes into Cabrasco, indeed the only holes into Cabrasco, each intersected wide intervals of strong copper moly mineralization. Mineralization here is disseminated, unlike at Pure-Kenes, where it's carried in the veining. Primary bornite with secondary chalcopyrite, and we're talking a very large 3 square kilometre, largely untested anomaly here at Cabrasco. I think we have, both projects have strong corporate appeal for different reasons, have different, I think, gestation periods and return profiles, and work well together as a portfolio. And we'll be able to work year-round on these properties. We have about 107 million shares on issue at the moment, trading at around 16 cents. We're issuing approximately 65 million shares to Rugby Resources. It's a scrip-based takeover of Rugby, through which we'll acquire the Cabrasco project. Including that dilution, we'll have a market cap of around 27 million. The 2 disclosed shareholders are myself and Tony Manini. Tony's a fellow Australian national and one of the principals of EMR Capital. The near-term news flow is that we'll be back on the ground drilling Cabrasco later this year. We're targeting September to have a rig turning, and we're also working on a few corporate initiatives in parallel, which include the uplisting to the TSXV. We're currently listed on the CSE, and in conjunction with results at Cabrasco, we're also working on a dual listing on the ASX.
Our focus is really on exploration and discovery of copper and gold now. We have 2 main projects. Our flagship project is the XXIX project in the Iberian Pirate Belt. This is the foremost VMS, volcanogenic massive sulfide district in the world. There are a number of large producing mines and continues to attract major operators such as Wealthion, Sandfire, First Quantum, and Grupo Mexico. Great infrastructure, etc., great permitting environment, and so on. Our second project is an emerging sort of copper gold area for us. It's an overlooked mining district, and look, watch this space because we're drilling there, really getting some exciting results. So, starting with our plan for this year, it really was focused on a multi-target exploration program aimed at making new discoveries. And secondly, we were looking to expand and delineate our first discovery, which is called La Romana, a copper, tin, silver discovery, ahead of publishing a maiden resource later this year. So we're well advanced on that program, multi-target drill program, and we're having some success already. So starting with the XXIX project, I describe it really as having a sort of low risk profile with high reward potential. That's because we already have an advanced discovery at La Romana with a very strong pipeline of 100% owned exploration targets. It is one of the few new copper discoveries in Europe with the potential for production this decade. It's first-class location in terms of infrastructure and permitting, etc. Really doesn't get much better than that. We have, as I say, a near-term resource to publish later this year, and we have advanced metallurgy already completed. And we just heard the importance of metallurgy in the previous talk. So, underpinning our plan and our strategy here is to grow our discovery at La Romana and grow it from probably somewhere where it is today, which is sort of between 15 and 30 million tons, and take it to 50, and then ultimately 100 million tons of copper resource. How can we do that? Through making additional discoveries. So La Romana will grow, and we hope with the exploration program we're doing, we'll help get to that bigger target of 100 million tons. At a smaller scale, the economics look favourable for trucking or conveyor belt to one of the nearby mines. That's a lower capex, capital intensity opportunity. But if we can start getting to about 50 million tonnes or 100 million tonnes, then we're looking at standalone and competing with some of the bigger operators in the district. So that's really our overall goal. Looking at the location, within about a 40-kilometre radius of our Laramana discovery, there are 3 processing centres or soon-to-be processing centres. And if you expand that to about a 50-kilometre radius, that will also include some of Sandfire's mines as well. We're also about 75 kilometres from a smelter, which is owned by Atlantic Copper. All of this is connected by first-class road and power infrastructure. I mean, this really is what good looks like. So potential for making additional discoveries in our property package, I consider is excellent. I really do believe we can make several additional discoveries here. These type of deposits typically occur in clusters. So once you find one, you're likely to find others. This image on the left is a gravity anomaly image. It's a sort of just one of the layers of information we use. Very effective tool in the Iberian Pirate Belt. You can see a gravity anomaly down in the south. That's our Laramana, where we made our Laramana discovery, testing that gravity feature. Our second discovery with less drill holes at this stage at Cañada Honda was another gravity target. We're currently drilling this very large anomaly called Bravo as well right at the moment. So, very effective tool. We've got most of these targets are untested at this stage. So I firmly believe we can make more discoveries in this patch. Another differentiator, comparing our copper metallurgy. So we've completed very advanced metallurgy here. It's at least PFS level. So this chart just compares copper concentrate grade with recoveries. And put simply, we have the best copper metallurgy in the Iberian Pirate Belt. The blue squares are some of the operating mines, and the green dots are some of the more advanced and development projects in the area. So, this is a huge value driver for us with copper concentrate grades up to 30%, recoveries of nearly 90%. We also have a tin co-product where we're getting 60% concentrate grades and recoveries. That puts it into the premium quality there as well. Very simple flow sheet to produce both copper concentrate using flotation and gravity to produce the tin. Coarse grain size, very low in deleterious metals. In fact, we're not expecting any penalties whatsoever in the copper concentrate. That means it can be treated at the Huelva smelter as well. So, this is very good news for us. All of the other mines and other development projects in the belt have some degree of penalty elements that they have to deal with, and etc. A quick look at our timeline. So I mentioned we're aiming to have a maiden resource at Laramana published later in the second half of this year, assuming we move to a mining license application. Given the current process in Spain, we could be looking at permitting within 24 to 28 months, and then allowing for a couple of years of development. Could be in production within sort of 5 years. So that's pretty fast for fast timeline, but it is achievable in the Iberian Pirate Belt, and there is track record for that. But in parallel, we hope to obviously make some additional discoveries and get us to that much bigger target that I mentioned before of maybe 100 million tonnes. So just very quickly, I mentioned we have a second project. It's very early days on this. It was a historical mining area for copper, nickel and cobalt, producing very high grades from the mines there. Looking at sort of breccia pipe style mineralization. But in our first exploration work this year, we've also identified some pretty significant gold. So this is really emerging as a very exciting target for us, not only for copper, etc., but also for gold. So we've planned 6 holes. The first 3 holes were really targeting in and around the old copper, nickel, cobalt mine workings. And each of those holes intersected gold as well, including 46 meters of 1.1 grams gold. Now, there was no record of any gold production here. There's been no record of gold at all. So this is a new discovery. We've also drilled anomalous gold mineralization in breccia over more than 100 meters thickness. So that's suggesting sort of a much larger size potential here than we were just looking at with the copper, nickel, cobalt breccia system. So what's really exciting for us is not only that we've been hitting gold, that those first 3 drill holes are outside of our gold target. So earlier this year, we did some soil geochemistry, etc., and channel sampling and so on. And we identified an area of strong gold anomalism to the east of the old mine workings and away from the effects of any of the previous mining. So, some of the surface sampling gave us 37 meters at 3 grams gold, a trench sample 20 meters at 1.7 grams gold. So the next couple of holes we'll be testing beneath those trench and channel samples. Very exciting for us given the results we've got from the first 3 holes, which were not testing the gold target. So, it's still a copper target, but it's looking, at least at this breccia pipe, more like a gold target. But we have other breccia pipes in the area. We've got geophysics, etc., suggesting there's more to come out of this project area. So exciting at this early stage.
So our overall thesis 3.5, 4 years ago when we got involved in Kazakhstan, as I said, in the back end of COVID, was really we felt this was a country that would continue to see more and more interest from an exploration perspective and more interest from the major companies. Not only is it well endowed from a metals and mining perspective, but they went through some major changes really 2018 onwards, not only in the mining space, but more generally across all sort of fiscal and economic reforms. But on the mining side, they made some changes going away from that traditional contract system and adopted a new mining law, which is about 80% based on Western Australia. The 20% actually coming from Canada. And as you can see, when we got involved in the country, Rio Tinto was already there. Fortescue had just come in and picked up a big swath of ground. Groups like RCF, in fact, they just recently here, about 18 months ago, finished commissioning a large-scale gold mine with a Kazakh partner, $500 million build. And groups like Chevron, of course, Kazakhstan, well known for the oil and gas resources in the western part of the country. Chevron, in fact, just over 3 years ago, expanded their operations in the country with a $46 billion investment. And so real large Western investment has come into this country over the last 25 years. And as you can see, since we got involved and quickly established ourselves as the 3rd largest landholder in the country focused on copper, we've continued to see more and more interest from the majors and, of course, a big push from the European Union, in particular when it comes to things like critical minerals. So a great place to operate, very well endowed. And of course, as many might be aware, not only is it well endowed, but it's top 10 in the world of producing, many of the things that we use every day in our everyday world. So top 10, uranium, chromite, titanium, zinc, copper, iron ore, coal, big on the oil side. A lot of refined copper, in fact, comes out here as well, and they're actually increasing the smelting capacity. And you can see those 2 pictures there we've included. Those are 2 large-scale mines right up and around where we're based, about 3 hours from the capital city, the Boshakul copper mine, owned by Arras Minerals, producing about 100,000 tons of copper per annum and about 120,000 ounces of gold. And then the Bogatyr coal mine, which is the 5th largest coal mine in the world. This started in 1954 and still has a 100-year reserve. So this is literally out the back door of where we're based in Ekibastuz. And it is clearly a mining area in this part of the country. Now, the other thing that is definitely, I think, catching hold and becoming aware is the cost structure. And of course, we know globally today, not only is it hard to find deposits, but it's hard to find deposits that you can make into mines, largely on the basis of the creeping costs up to build them, infrastructure challenges when you're at the top of, the Andes, for example, and you've got to put water in, you've got to bring power in. And this was a slide that the Mining Visuals guys in Europe put together last fall. And they looked globally on what does it cost to produce a pound of copper across all the copper producers. So you'll see there the Glencores, the Codelcos, the Rios, the BHPs, the Tex, the Lundins. and putting those assets together. And what does it on average cost to produce a pound of copper? And quite interestingly, some of the lowest cost copper mines in the world today are in Kazakhstan. And not because one would look at them and say these are high grade mines. In fact, these are largely large scale open pit operations. You can see in the case of Boshikal, which is again, we're pretty well completely surrounding it with our license package now. 0.33% copper with a gold byproduct credit, so it puts it into that 0.5% copper equivalent. And all of a sudden you're producing copper on a net cash cost basis for less than $1 a pound. You've got less than 50 cents a liter diesel when you're filling up the haul trucks. You've got $100 a meter to drill core, 2.5 cents a kilowatt hour power, and a highly skilled workforce, of course, with plenty of universities that are putting out mining engineers and geologists. So it's a big sort of aspect, I think, that is catching on here. Not only is it well endowed, not only do you have a mining law that we all recognize is straightforward, transparent, big support from the government here, because again, this is a mining country, but you've got a cost structure that is probably one of the lowest cost structures. And so your hurdle to find things that actually are mines is much lower than in many other parts of the world. And ultimately, when the Soviet Union collapsed and Kazakhstan became independent in 1990, there really hasn't been a lot of modern exploration. And so we saw that as an opportunity, came into the country and quickly, spent a lot of time going through all the old Soviet reports, identifying license packages that we thought were prospective, really on the basis of that work. And then quickly, as I said, became, the third largest landholder in the country. This map here, you can see there's two different colors. There's the shaded blue areas, and those are licenses that are underneath the Arras Tech Exploration Alliance. I'll talk a little bit about that. We still control 100% equity in everything you see there on the page, but Tech on the blue shaded areas at the end of this year, once they've completed the $5 million spend, we'll have the opportunity to select projects to begin earning equity. And then the clear ones you see are ones that we have 100% control of and are doing the exploration on. We announced in February we've got a suite of targets that have been prioritized. You can see here in what we're referring to as the Boshikal group, the Boshikal mine, which I talked to a little bit earlier, the 1 billion tons of 0.3% copper is operating right here. It's a 35 year reserve, and again, one of the lowest cost operating copper mines in the world today. You can see our license package completely surrounds that, and that is part of that Arras Tech Alliance. And so in those areas there, we've got 4 to 5 new porphyry style targets that have been identified and worked up last year and the earlier part of this year. We've done some additional geophysics, and in fact, we do have a drill that's turning there right now as we speak, starting to test and do some initial test work on these targets. And so, the expectation, I think, is that, we've been working with Tech, as I said, and prioritizing targets. Tech is very much, clearly focused on large scale copper. And so, from some of the disclosure we made late last year, where we had a numerous number of targets that were identified, both precious metals and base metals sort of focused. Really what's getting drill targeted here now as we speak is the large scale base metals, large scale sort of copper targets. All the precious metals targets really are not a priority for Tech, and so we would expect to see most of those would probably come back to us next year, and now have multiple large-scale copper targets that are currently being drilled and drill tested and will be here over the next 6 to 7 months. So, Arras, we really believe we're at the right place at the right time. I think if we're being honest, 3 years ago, it was a much tougher sell to talk about Kazakhstan, and Kazakhstan as a jurisdiction to operate. I can speak from my experience working throughout Southeast Asia and Latin America, and it's really never been this straightforward. We've had enormous support from the government, from the embassy in Ottawa, and the transparency and clarity on being able to pick up licenses and get your drill permits in 30 to 45 days and then get out and get on it has really been refreshing. We're now seeing, of course, the rest of the world, arriving and getting set up for all the reasons that I talked about earlier. We've really tried to manage risk prudently here. And as I said, protect the share structure, We've had great support from shareholders, and now are in a position where really over the next 18 to 24 months, we're financed for the work that we need to do. Plus, we've got flexibility where we can scale up, as is demonstrated here. Just 2 weeks ago, we've added another drill, and really at these sorts of costs, it's not adding a big amount to the overall budget, and we've got plenty of capital, for the next 24 months, 18 to 24 months, and also being opportunistic. I mean, we're always evaluating new opportunities. We've picked up additional licenses, over the last 18 months, and I suspect after we get through and into next year, we'll probably end up, trimming back some of the license package, given we've given first pass on some of these targets that may not be as interesting, and of course, then ultimately keeping our eyes open for further opportunities.
Thanks for watching. If you would like to learn more about copper as an investment, download our free report by clicking on the link in the description below. I'll be back next week with more from Rick Rule's Precious Metals Symposium. See you then.